you know what I mean?
Target locked. Ready to fire.
Yo, good morning, everyone, and welcome to the Morning Market Report. It's Monday, November 4th. It's OG Monday. Got the shirt on, got the coffee mug. I see the Otter Gang's joining us in the chat, so we're good to go. We got all the OGs are here joining the alumni. We're ready to do this. We got some data to go over today, guys. Not a whole lot on the news side, but we do have some new data on the Piper Plan DCA, so we're going to talk about that. We're going to go over some charts, talk about why I think Bitcoin, $40,000, October 2026. We're going to talk about what could change my mind on that, because that's not, locked in stone. Nothing's carved in stone. It's crypto, right? It's a Tuesday, which is actually a Monday today. Anyway, but yeah, we'll talk about what could change my my analysis and my assessment on that. Of course, new intel comes in. We have to restart the cycle of analysis, right? So that's how it all works. But yeah, we're going to break it all down today, guys. We got all of that and a whole lot more today on the Morning Market Report. Let's go ahead and get it. You guys know what time it is. Class is in session. Let's get it. There we go. Brought to you by Chart Prime, guys. As always, we got. Let's go see here. I'm solo running today, so let's go see who we got in the chat here. Let's see. We got Harp in here with us. We got Witchwife Fine 89 in the house with us. She's just Witchwife now because those stupid name tags are not working. Massey 33, I know that name, even though it's backwards. Mike Vollmer's in here with us. Wayne, Lunar Beaches, I saw him earlier. Alexandra G, the mod queen, of course. Alex O Crypto in here, dropping the otters in the chat. I appreciate you, man. Who else? Crypto Keith, CryptoCoin Mindset's in here with us. Trade Intuition, JB Hulk Smash, and a whole lot more, guys. You guys are just all over. You guys are crushing it on today on the chat. So I appreciate everyone that's here right now. Guys, if you haven't done so yet, go ahead and smash up the like buttons before we start this thing off. If you want to wait and see if it's valuable, sure, you can do that too. I have confidence that that will be the case. Let's go ahead and jump over into the news. And let's talk about what we got going on over there besides crypto bubbles. Let's bring that up. There we go. Boom, boom, shakalaka. There we go. All right, looking at the metrics today, guys. Of course, I just did the Piper Plan DCA setup over there, but let's take a look at the metrics here at Into the Cryptoverse. There's a couple of them that I want to lay out for you guys, like best data DCA and all of that. So we got a lot of stuff to go over on here today. Looking at our current crypto market cap, the total crypto market cap right now, we're currently sitting at about $2.935 trillion. Our trend line on this is 4.707 trillion. We're currently 37%, almost 38% undervalued right now from the fair value price. And you can see we're continuing to sell off here and push away from that red median line. What else we got in here? Wristbands. The Bitcoin risk bands currently right now is sitting at about 4.03. So that's a 3x DCA on the Bitcoin side. There was another one I want to show you guys in here. Best days to DCA. Best day to DCA. And we're going to put this from 2025 on, like January 2025, because I like to watch it for the year. Obviously, we've had cycle changes over, the lifespan and everything of Bitcoin. And so it's a little bit different. But when we look at this from the perspective of 2025, January 1st, let's get it there. What about TP? We adjusted the TPs, Blackie Chan. We adjusted the TPs. I'll go over all that in a little bit. Just pay attention. You're going to like it. I guarantee it. All right. So the lowest ones on here right now, Saturday. Saturday is the best day to DCA according to what we're seeing here, because we've been getting these Sunday pumps lately that have led to Monday dumps. So it's Sunday, Fridays, or Tuesdays are the three best days to DCA in that order. Saturday, Friday, Tuesday. So that's the best days to DCA. Then there was something else I wanted to show you in here. What was it? Oh yeah, time in the wristbands. Because you guys know we're right now we're at that 4 level. We are in this band 20.4% of the time in Bitcoin's history. So 20.4% of Bitcoin's total lifespan it has spent in this wristband. So we're at an average level for Bitcoin, considering that it's kind of the middle of the road for ups and downs. So take picture, BC. Oh, take picture. Yes. TP. Take picture. Shout out to JR. Yeah. So 20.4%, 20.3%, 20.3% of the time we spend it in wristband 3, which would be a 4x DCA. So 3 to 4 times your DCA amount. That's why we do that layout of a quarter of your DCA when we talk about it on our Discord and in the new document. But I just wanted to show you guys that stuff. Pretty interesting. Let's jump over here, take a look at the fear and greed index, currently sitting in extreme fear. Extreme fear. Don't be scared. Be prepared, guys. We're prepared. One of the people on X, and I got to show you this. It was pretty good. Because I do my dynamic thumbnails. I want to see, did anybody else say anything here? Some people liked my comments. Okay. Anyway, this guy here, let's like Alexandra G's post. Thank you, Alexandra G. Appreciate you. This guy here, Jason Owen, I did my dynamic thumbnail, and he said here, it's more like this. And let's let it play. There it goes. Got the bull coming in, fighting him off, right? And so I said, you know what? I like that. I like that. I love it. Preparing for that too. Position for whatever happens, and that's the bottom line. We are preparing for whatever happens in the market, whether it be the $40,000 bottom in October or whether we get a bounce from where we are now. And I am seeing some things on the charts that make me go, this would be an interesting place to bounce, and we'll talk about that too. But I just wanted to show you guys, that. I'm not straight bearish. I do have hope, but I would need to see some things happen first, and we'll lay that out. Stock Money Lizard had a really good post, and I liked it. You guys see the Bitcoin chart here? He inversed it. He said, flip your chart upside down. Would you buy Bitcoin at this level? Guys, let me know in the chat. If this was the upside movement, would you buy Bitcoin at this level, or would you wait for it to break through, retest, and bounce? Put a 1 in the chat if you would buy this right now on this, how this chart looks. Put a 2 in the chat if you would wait. It's that simple. And that's what we're doing right now. We're hitting that critical level when you inverse this thing. Sometimes it helps to look at it from a different perspective. Midterm data confirms bear market. I want to play this for you guys. Hopefully this will give me audio. Let's see here. Let's see.
In a while. So I know there's still people calling.
So this is Kyle Dupes, and he's talking about the midterm. He's talking about the midterm cycles that we have on politics, and I've talked about this. Someone said, "Well, why do we dump and then pump based on the 4-year cycle?" I said, because of elections and midterms. Evidently, Kyle's of the same mindset. Let's listen in here.
The 2-week chart has now officially closed below the 50 EMA. That's typically not a good thing. In many people's books, that signifies the end of the bull market. And more so, if that 50 EMA begins to roll over, that's going to be more aggressive. But what's more important about this, and specifically what I wanted to highlight, is what happens around the midterms. As you can see over here, every time you lead into midterms, it is a bear market, highlighted by the red vertical lines going down the screen over there. So bear market, price goes below the 50 EMA. You lead into the midterms. That was back into the first one, 2014-15 bear market, and then you find your low soon after. 2018-19 below the 50 EMA, you lead into a bear market, you find your lows near the end of that midterm period, and then you begin your bull market. And then 2023 and 22 and 23, same story, right? Below the 50 EMA drives price down into a bear market, and then now we're seeing the same thing for the first time in a while. So I know there's still people calling for 200k, 300k Bitcoin, and is it possible? Of course, anything is possible. First, you would need to shift the high time frame trends back towards the upside before getting excited about those kind of numbers. In my humble opinion, you should just wipe those numbers out of your head until you can reclaim some key levels.
Yeah, so good point there that he had. I just wanted to bring that up. And then also, Kabisi Letter putting this out a little while ago, still seeing weakness in the market. It's got an article going over this today. U.S. job market is weakening beneath the surface. U.S. private payrolls declined 9,000 jobs in September when excluding leisure, hospitality, education, and healthcare sectors. This comes despite the total private payroll addition of 97,000 jobs. This also marks the 5th consecutive monthly decline, the longest streak in at least 3 years. During this time, private employment in most of the productive sectors have declined by nearly 200,000 jobs. This stands in stark contrast to the total private payroll gains of 332,000 over the same period, or 66,400 on month on an average. Beneath the surface, the labor market is cracking, and we are still seeing some things that give us indication of that. We'll go over that article here in a bit. Looking at the 24-hour liquidation heat map, guys, in the past 24 hours, 110,251 traders got liquidated. Total liquidations coming in at $234.44 million. Largest single liquidation was on Bitcoin. Not that much, 1.75 million. In comparison to what we've seen typically, not that much. Let's take a look at the CNBC TradFi sides, give it a refresh and make sure that everything's going good here. There we go. Looking at the Dow Jones, currently only up about 0.1% right now. S&P's up about 0.8%. NASDAQ up 1.55%. A lot of that on the back of Google. Good old Goog, Alphabet, pumping up hard today. So I got to smash the like up on my own video. I smashed the like. There you go. I'm like number 1. I'm like number 30. There you go. 30 out of 123. So looking at the Russell 2K, it's up about 0.7% right now. And the volatility index sitting well above 17, sitting at about 21 right now. Data centers. We'll come back if we have time to go over this. I just thought it was interesting. This Texas data center expansion raises blackout risk during extreme winter weather. If you guys don't know, back in 2021, Texas had a massive grid collapse because we had so much reliant on solar and wind energy and everything. We could not support all the demand. Now the data centers are just popping up all over Texas. Staggering amount of requests from data centers, crypto mining facilities, and industrial companies. Everyone wants to come in and get on our grid, but will that cause us to have blackouts? I think I just went over it. Look at that. We're done. Let's move here and go talk about the daily and hourly here on the crypto bubbles. Bitcoin currently down about 0.3%. Ethereum's up 0.2. XRP's up 1.3, but having a little bit of a pullback in the past hour. BNB down 0.7. Big movers today. Let's see here. Zcash down 2.3%, down 18% on a weekly, but still up 106% on the monthly. Chainlink is down 0.1%. Anything that's really moving? Not really. Kind of a flat day today, guys. So be very careful. Not a lot of volume, not a lot of volatility, and that means you could just sit in the trade. Going sideways. You might want to ski, as Alex O would say. You might want to be a skier today. Just sit on your hands. I want to see, probably not. No. Dallas Fed Manufacturing Index going to be out here in the bottom of the hour in about 15 minutes. But tomorrow we are going to get ADP employment change. This is your new weekly report that they're giving us. We're going to get PP in your eye. Shout out to Alex O. And retail sales tomorrow with core PPI. Core PPI expected to be higher. Retail sales expected to be lower. At Christmas time shopping? Interesting. And a PPI month of, I guess that's for September. These are all September reports because we didn't get anything in October. So this data is going to be 2 months old anyways. What about October? We're going to get that? No, probably not. We're probably going to get that stuff. It says we are, but that's, CB consumer confidence for November. I don't know. We'll see if we get any of this data tomorrow. Perhaps. Wednesday this week, we got durable goods orders coming in, initial jobless claims. That's your weekly unemployment filing, Chicago PMI. What do we have on? That's it. That's the end of the week. That is the end of the week right there, guys. Short week because we got Thanksgiving here in the U.S. So, flashbang, sorry. Damn, it was even bright for me. Looking at the 30-year or 30, looking at the CME futures Fed watch tool for the December 10th rate cut. We're now looking at a 75.7% chance that we get a rate cut in December. And again, I do believe that this is because we are in a state of emergency due to the jobs numbers. Let's go over to that article. Let's take a look here. So the economy is set to grow in 2026, but a new survey warns of weak jobs, sticky inflation, and hidden risk ahead. Guys, I'm sorry, I cannot. Maybe I can command plus. There we go. Look at that. I can make it bigger. That's what she said. Look here. U.S. economy set to grow in 2026, but a new survey warns of weak jobs, sticky inflation, and hidden risk ahead. U.S. economy projected to grow modestly, but growth edges up. Risk persists. The survey, conducted from November 3rd to the 11th, involved 42 professional forecasters. The median outlook is for 2% growth in 2026, up from the 1.8 in the previous October survey. And this contrasts with the 1.3% growth rate projected in June, according to Reuters. So growth is projected to be supported by strong consumer spending and business investment. The Trump administration's new import tax could shave off a 0.25% more. Economists also noted that stricter immigration enforcement is weighing on the outlook. Inflation is now projected to finish the year at 2.9%, just under the 3% forecast in October, and ease only marginally to 2.6% in 2026. Federal Reserve is expected to deliver a 0.25-point rate cut in December, with only another 0.5-point reduction for next year. So sometime over the year. Wow, that is not even showing for you, is it? I'm talking about this article and reading it to you. There you go. The Federal Reserve is expected to deliver a 0.25-point rate cut in December, with only a total of a 0.5 point anticipated for next year, moving policy rates closer to neutral. They make a case for a strong economy, but there's also some growing speculation of a recession. Let's take a look at that. Commerce Secretary Howard Lutnick on Friday predicted a rapid expansion, touting a possible 6% growth of the GDP under President Donald Trump, citing a historic wave of capital, of manufacturing, construction, tariff-driven capital investment. Meanwhile, on Sunday, Treasury Secretary Scott Bessent told NBC News that the U.S. economy is not in recession, despite a rate-sensitive sectors like housing still struggling. So not in a recession, according to Scott Bessent. Growing speculation, though, is happening. Bill Gross, a veteran investor and PIMCO co-founder, expects the Federal Reserve to deliver another rate cut in December. Gross argues that ongoing market volatility and the risk of further economic strain will push the Fed to act. In October, JP Morgan CEO Jamie Dimon warned that a 2026 recession is still possible, despite the currently strong U.S. GDP. He voiced concerns. I think we need to stop looking at the GDP, guys. Let me know in the chat, how many of you guys feel like we are in a recession and have been for, at least 6 months? Put a 1 in the chat if you think that. If you don't think that, and you don't think we've had a recession yet, put a 2. And if you think that we have not, or that we have been, either way, and that it's going to be in 2026, either as a carryover or as a new recession, put a 3 in the chat. I'm just curious how you guys sit on this, because according to this, right now, everything is rosy. Evidently, I'm supposed to put on my rose-colored glasses and just get back to the data. That's what we're supposed to do here. So, that is all I have there on that. Let's go back to chat cam. Let's go back over here. Let's get off that bright screen. Jeez, Louise, come on, man. Yeah, let me see what you guys are saying here. A lot of people feel like we have been. Okay, bedridden, is it that bad over there? Where you're at? Do you feel like you've been in a recession in Europe, man? Let me know. Alexander G says yes. Wick's wife 589 said yes. Hawk Smash said no. Lunar Beach just said maybe not. 0.75. Yeah. GNP is greater than GDP. Mikey Chan, you're so smart. All right, let's go talk about the chart, guys. Let's get in on this chart, talk about what happened here. So why is Piper a little bit bullish? Because if we look at the 4-hour here, we did get a nice oversold. Click trigger down here. We hit the bottom. We got the bottom out of the through 7. It fired off there. Okay, we started into a transition ribbon. We bounced inside of the platinum pocket. If you guys don't know where this comes from, this platinum pocket is from the April low to the all-time high. So we did get what the platinum pocket is for. The platinum pocket is designed that when your golden pocket fails, which is typically where you do get support and bounces, right? That's typically where you'll get your reversals. When it fails, it happens in the platinum pocket between the 786 and the 887, and that's just how it is. Over and over we see this. If the golden pocket fails, watch the platinum pocket. If that holds, that's typically your turnaround point. We did get that, and you can see we even came up here. We came up off of that bottom side, got all of this resistance at the 786, and then we kind of curved into it, right? Giving us nice little stiletto there, sort of. Didn't come down low enough to be a full stiletto, but it's in there. It's kind of a broken shoe. Maybe it's a stepping stiletto. There you go, Alexo. But we are now holding the 786 as support. So there's reasons to be a little bit hopium filled here. Okay. Shout out to CME Gap. Good morning to you too, man. Appreciate you being here. I don't ban people for saying CME Gap here. That is just an Alexo thing. As a matter of fact, I will even bring the chart up and show it to you. Love you, Alex. Let's go see here. We had a CME Gap. It was down to 85,330. We have pulled down into it. Here, let me get it on there. Let me get it on there. Put it on daily. On the daily. We have not closed the CME gap fully, guys. It's all the way down here to 84.6. CME gap not filled. So there you go. We still have one sitting. No, that one got filled. That one got filled. That one's good. That one's gone. Still have a little bit up there. Still got that one. Okay. Anyway, I don't bank on them. They're not on my charts, but I definitely look at them. So Piper knows a thing or two about stilettos, sir. We don't talk about that. I told you that in private, Eric Wallen. Shout out to Eric Wallen. Love that dude. Biggest troll in the crypto space. If you guys aren't following Eric Wallen, you need to. Okay, so what am I watching here and why am I a little bullish? Platinum pocket bounce, getting nice support on the 786. Why am I not fully bullish? Put it on the daily, guys, and let's take a look at what we have here. Okay, yes, same scenario. Still did what it did, right? Still wicked down, pulled up, but now sitting above the 786. But money flow here is still coming down. Volume is still coming down. And now it looks like we are just doing a transition ribbon. We're not really getting any breakout on the ribbon here. That's your daily. Daily doesn't look overly bullish, okay? We still haven't bottomed out on hardly any of the indicators here except for the True 7, okay? Go over here and look at the weekly. We did get our nice second weekly green candle here, but you guys can see by our second one, we were here on a pump up back here in April, March, and we still went quite a bit lower. Matter of fact, from the time that we hit our second one here, let's go see. Our second one was here. By the time we hit that, no, I guess we'll go back one more. Let's go here. We'll call it like that. Down to that bottom, that would have been 11.4% drop still. And mind you, for DCA purposes, yeah, I'm still dollar cost average, absolutely, because we're prepared either way. But I am seeing here on the weekly, though, that we still have histogram giving us a nice big drop here, deep in red. It's not going anywhere. We do have bullish signs here on our Oscillator Pro Plus for the weekly. We have oversolds triggering here. We're getting pretty low in Oscillator Rev and True 7 Aspire, but volume still coming down, money flow still coming down, and we are getting low here on the RSI. But again, not seeing it across the board. I want multi-confluence. The big factor that I'll pull in here and we'll take a look at, I guess I'll put it here on the monthly, is if you put this on the monthly, where I really like to see strength, that gives me, hey, okay, yeah, we're bottomed. Look here. Back in the bottom of November 2022, when we hit the bottom, we were definitely pegged. Guys, we're still pretty high up. We haven't even broke the 50% line on the RSI primed here. We're still about to cross over on the MACD at the end of the month here and start into the red swoop, which is big drops. That was how we went into crypto winter last time. We're still about to cross into a bearish signal there. Already crossed into a bearish signal there. On the monthly, I am not seeing a lot of strength. I'm not seeing anything that says we might be ready for another bounce. The only point that I will make is that we had these 30% pullbacks here twice this cycle, and we pulled back. But both those times, we found support on our 70% band for the RSI. So, and we didn't cross. We didn't cross. We're actually showing more weakness than any of the other drops that we had. And time-wise, why do I think 40,000 and that timeline? I'll break that down in a second here of why I'm thinking October 2026 and price-wise. But I need to see some strength get broken. But let's go back and check out the chat real fast. Trying to stay up with you guys here as much as I can. Who else we got in here? Anybody? Steve Hickey, what's up, man? He said good morning to Alexandra G. It's very nice of you, Steve Hickey. Ball and Wallen. Caveman 7116 in the house. I appreciate you being here. Buck Buchanan, my favorite crayon eater. First, he carries around a purse. Now he's talking about women's shoes. Buck, I hate myself for knowing you. 84, 67, 67. Anyway, all right, let's go check out these other factors that what I need to see. What does Piper need to see to be bullish? Why am I saying $40,000? Why am I saying October 2026? First, we're going to come over here, take a look at this. Turn off my objectives. Turn off the battlefield. There we go. Wish it was that easy. Let's go with market tops and market bottoms. So, guys, if we look at the historics on the charts for bear cycles, and I'm going to throw in even the institutional interest now, okay? In this discussion, we've always gone back to the platinum pocket on retracements. 78.6 to 87% pullback. Even last cycle, which had a less than stellar run, couldn't even get into the golden pocket here in that cycle. But every cycle we've always broken in or past the golden pocket on retracements. So we knew over a year out that this was our target for this cycle. Our members here in the Piper Academy knew about 103 to 117 over a year ago. And that's damn near where we topped out at. We didn't even hit it here in this cycle back in 2021. So we had a little bit less of a pullback. It was just under the 78.6, but it still got there. Okay. If we did that pullback from this cycle, because I mean, yeah, we didn't go down as far as we typically had in the past. Some of these went, super, super far down into the 786 platinum pocket. But if we look at this and we go, okay, it didn't go as high, so it's not as low. Okay, well, we still hit higher this cycle. So I still think it's a possibility that we hit the 786. That's $39,000 Bitcoin. Thank you very much. That's why I need OC. OC's not here. I don't show you guys charts. There you go. Thank you, LBC. I appreciate you. So looking here again, platinum pocket bottoms every cycle. Okay. If we take a look that we ran up, and I'll recap this for you really quick again. If we look at that, okay, we didn't go fully into the golden pocket levels for this cycle back in 2021. So we didn't fully retrace as hard either. If that's the scenario, that if we don't get the big pumps, we don't get the pullbacks as much either. Okay, cool. We got more of a target hit this cycle than we did in 2021. So even though we just barely came down below the 786, we had a little bit more of a contraction from how high we should have hit. It should have been, last cycle should have hit between 70,000 to 85,000 to be in this golden pocket. I got you, Blackie Chan. I got you. If we look at 2024, or the 2025 cycle, okay, we hit above. We actually broke our level here of the 0.66 at 117. We actually hit 126.2. So I would think that it's very likely if we still came back and hit 786 back then, despite not hitting that 0.66, that we could come down to that level, which would be a $39,000 Bitcoin this cycle. Okay. Now let's say, okay, cool. That's great. We didn't hit it here. We hit it here, but we do have a lot more institutional buy-in. I would argue this. We don't really have a lot of institutional buy-in right now. Everyone talks about the ETFs. That's retail. That's retail. And I actually know, I've heard of some of the Bitcoin whales out there, OGs, that have actually sold their Bitcoin and have bought the ETF because they don't have to worry about anything. It's all on an ETF, multi-sig, held by companies, and that they're big holders on that institutional side. They get a lot of protection. So I would argue that's retail, a lot of it. Institutions buy, and we've actually seen Marathon sold. We've seen a couple of other companies that have sold their Bitcoin too as it's pulled back. I don't think those are not Michael Saylor's, okay? Michael Saylor's probably the only one that's really going to be a diamond hands no matter what. I'm nice. We broke below the last two having anchored VWAPs, and we broke 46 to 47% from the anchored VWAP. If we did the same, we'd get down to 46, 47. Okay, yeah. When I say 40K, it's ballpark, right? I mean, obviously this says 39. I'm still thinking in the ballpark of 40K though. But let's say that we do have the institutional support. Okay, there's demand that did not exist, even from retail via the institutions. And so there's a lot more demand now. We go down to the golden pocket. That's 52 to 57K. That's still a pretty substantial pull down from where we are right now. Let's go here, pull that down. You're talking about another 34% almost just to hit the 618. So that's why I say 40K. I think in that ballpark of 40K, it's going to be pretty strong zone. Blackie Chan said Sailor might be screwed if he's delisted from the stock market. Yeah, and that's happening in January, guys, potentially. January 15th, they make the decision, are these funds or are these actual do they meet the requirements to be in indices? And so that happens in January. It goes into effect in February. So there's a whole nother factor there to shake out the market coming in January, guys. And it's also, I also want to point out, we might have a situation where there was so much damage done from the October 10th market sell-off, the $19 billion that they actually think may have been more like $300 to $400 billion of liquidations. They said the API, DDT talked about this, that the API may have only been picking up like 1 in 10. So if that's the case, there might be a lot of exchanges with some underlying damage, some scars from that also. And then, of course, we head into a bear market looking a lot like 2021, where we had Celsius get nailed and we had Voyager get nailed and FTX get nailed and all these like exchanges. So be very, very careful. Just MSCI, which is for foreign investors, correct? But it does remove them from a lot of the indexes, though. So that would give less exposure. There's a lot of passive money that gets put into those stocks, Wallen. A lot of passive money that gets put into those because people don't directly buy them, but they get them as a percentage of an ETF and stuff. So of an index. So. Also, market makers and liquidity providers got wrecked. Yes, absolutely, they did. Hashtag lurking. We appreciate you there. So there is a possibility of that too. But yeah, that's why the 40,000. Why the timeline of October? Because if we take a look here, and I talked about this last week on Friday on Crypto Blood Show. But if you take a look from the time of the bottoming to the time of the halving, okay, and we look at that, it's 547. Okay, 518. Actually, put that. Is that right? Is that right? No, there we go. Put it on the weekly. 539 to 539 on the weekly. Okay. That was your before from bottom to halving to top in the ballpark of that window. Okay. 371, 371, 518, 518. Within pretty close, within a couple of weeks of that. Okay. 518, 518 again. Guess what? we matched up to how long before the halving to after the halving, right? But what about from bottoms to bottoms? 104,028 days, 1,428 days, 1,442 days. Average of that, 1,435 days. That would put us in October 2026. And if you take a look from the top to the bottom, that top was November, bottom was in November 1 year later. Top was in December, bottom was in December 1 year later. I think this might be the only one that's a little bit off. This was November 2013, January 2015. So, but for the most part, it's about 1 year. And that's why I'm watching for October 2026. That's why I'm watching for $40,000. What would make me change my opinion on this? That would be that Bitcoin comes back and breaks the 52 week and finds support on it. That's the only way that I'm going to get bullish. And by the way, that still would not be a new all-time high. Obviously, we could get up here and just do this, and then months later comes down. But that is a much better scenario coming up back up to 117 and getting rejections for people that have been round tripping on this versus the getting out when they had a chance. That could give people a great opportunity. And so I'm not going to totally take that off the table as a possibility, but that's what would have to happen. 52-week SMA, getting a bounce and bouncing up. FDY in the house. What is up, bro? Of course, I go to the one camera that don't have both people. Let's go there. There we go. Now, I do want to pull this up here. We're going to talk about it. So let's come over here and this is the new update to the Piper plan, the Piper plan DCA strategy, guys. This is in the Discord for the members. But just to go over a couple of things on how this thing works for you guys. And I do have a video coming out that's going to break all this down. Nice, neat little package. Okay. Funding the Piper plan. First, decide what you can comfortably afford to invest each week. And I'll tell you guys, I am definitely DCAing right now still. I don't have such a conviction that the top is in and that we're going down forever. To just say I'm going to wait for the bottom. I always want to have exposure, especially on Bitcoin. But I did take all my profit at 126. Now I am working on my dollar cost averaging as we go down. I did not buy this morning when I dropped the thing because, again, Tuesdays, Fridays, Saturdays, best days to DCA. So I'll look at those this week. But deciding what you can afford, it goes into that in here. Like if you can afford $100, your DCA amount is $25, and the remaining $75 each week goes into USDC to earn APY or wherever you set your money at least, so that it's at least earning some APY. And then the reason for that is because over time, you're going to be, which we showed that we're in the wristband 3 and 4 for a majority of the time. Well, that would be the full $100. But what about the times that we go into 5X and 6X your DCA amount? That's going to matter because that's when you need that extra money that you set in USDC. So when you DCA versus when you take profits, we've updated this. There's now a DCA or take profit zones at 0.5 to 0.6. There's actually a transition overlap. Let me bring it in here. There you go. So from 0.5 to 6, you're at a 2-week DCA, 2 times your DCA amount, but it's also a transition band where you take your first take profit of 20%. Okay. At 6 to 7, you're also in a transition band. So yes, as LBC said yesterday, shout out to Alexander G dropping 5 Piper Academy gifted memberships. I appreciate you. Shante Hendricks, Andrea is in there. I can't read all the other names offhand because it's not the normal names. But hey, welcome to you guys. I appreciate you. Make sure you get in the Discord, get on the Piper plan. But yeah, so the 2x DCA and our 1x DCA for wristband 6 to 7, that's also a transition band. You're going to take 30% profit there. So we've added the wristband 5 to 6 and 6 to 7, getting 50% of your money. This whole thing is in the Discord. Make sure if you're in there that you go ahead and read it because we're setting up for the next cycle, in my opinion. So looking at the, hey, CJ Taylor, good morning. What's up, Clyde, my bro? But yeah, this is in the Discord now, so you guys can get that, pull that up. And quit going to the duo cam. I'm used to my man OCA here. But yeah, they've got a full breakdown. We've added some stuff to it, making this a bit better. A lot of work was done on this over the weekend. So I don't like to work the weekends, but I did for you guys. That's why. Just like an Intel guy changing the plan mid-cap. No, the game is over. We are now accumulating, in my opinion, accumulating for the next cycle. Buck. I'll leave it there. I'm not going to be mean. I was going to say something, but I just won't. But yeah, that's the Piper plan, guys. I dropped that in there. We also dropped down in the Discord and pinned it in there, the best days of DCA and the average time in the band. So you guys now have all that info too. But I think that's about all we have today, guys. I know I'm quitting early, but I've got to go buy some stuff for Thanksgiving. So we've got the turkey and we got the ham. I got to get all the sides today. We got family coming in town this week, so I feel privileged hearing that spill. Crypto Society. I feel privileged hearing that spill on Crypto Blood last week. Yeah, you got it even before. Like, I didn't have all that stuff together. And these guys hear it all the time. But yeah, I just wanted to break it all down, the why and the what. So appreciate you guys. We'll be back here tomorrow morning, 10 a.m., bringing you guys the news, the charts, the market, the headlines, and everything you need to have knowledge. OC should be live tonight for OC trade setups, or trade setups with OC guy, 7 p.m. Eastern Standard Time. And then I don't know, BC Port Corp may be live tomorrow. He may not be. Who knows? Who knows? He's a sporadic as a 5-year-old. I love you though, BC. It's your job. I know it's your job. Not all of us can sit at home and not have to have a schedule. But you guys keep me on a schedule, so I will be back here tomorrow to do that all over again. Until next time, guys, trade safe. Use some risk management. Peace, love, profits, and we'll catch you guys tomorrow. Later.
That's the rap. Chart stack data never lie. Piper led the mission, OC in the sky. Spaghetti on the screen, but the vision stay prime. Chart prime visual, signals on time. Alumni strong, we built from the grind. Lessons in the market that'll outlive time. Knowledge is profit, you know how we run. Till the next one, stay sharp, get it done.
You can't handle the truth. Emotional damage.
We'll see you at the next
Don't
one.
know what the fuck they're doing.
Morning market report out. 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 Out.
Boom shakalaka.
We'll see you at the next one. Morning market report out.
Nippy's going to Z.
We'll see you at the next one. Morning market report. Ow.
That was awesome, dude.
Hey, it didn't break. What else you got?